G'day guys, and welcome back to VEMA's expected value series. My name is Reese, and in previous weeks I've explained what expected value is and why we think it's such a key metric in trading, as well as how to improve it using VEMA's tags and analyze feature. Now there are other ways to improve your expected value, and that's what I'm going to be talking about in today's video. Righto, so if you've been watching these videos, you would hopefully be familiar with the expected value formula by now. So expected value is equal to the probability of a win times the result of that win, minus the probability of a loss times the result of that loss. So I like to try and think of these terms as levers you can pull, right? And pulling any of these levers will change the expected value. If you can increase your probability of a win without changing any of the other results, you would increase your expected value. If you could decrease your probability of a loss without changing any of the other results, you would increase your expected value, which is what we want to be doing. So I group these into two categories. I use probabilities and results, right? So probabilities being changing your win rate and your loss rate essentially, results being changing your achieved risk to reward, and also your average loss or your average achieved loss, right? Which is not a metric that we show you directly in VEMA, but it is the one that we calculate for the expected value formula. So I'm probably just going to talk about probabilities today. I'll focus on results next week. So when it comes to probabilities, there are two things you can look at. You can look at your probability of a win, and you can look at your probability of a loss, right? Those are the two probabilities that go into the expected value formula. In terms of probability of a win, a higher probability of a win is going to lead to a higher expected value, because if you have a higher win rate, you're winning more trades. It's going to increase your expected value. Your probability of a loss, if you have a higher probability of a loss, that's actually going to lower your expected value. So that is not what you want. You want to find ways to decrease your probability of a loss, which is what we're going to be focusing on today. So that did not work as nicely as I was hoping it would. Lower probability of a loss is equal to higher expected value. So what you want to be doing is decreasing your chances of losing trades, right? That's going to lead to higher expected value. And you want to be increasing your chances of winning trades. That's going to lead to higher expected value. Kind of intuitive when you think about it. So how can you increase your probability of a win? Well, doing more things with higher EV is going to increase your probability of a win. So if you remember from last week's video, when we were looking at refining tagging systems, right? So you would start with, say my Tuesday trades, and then I found that I was actually profiting on break and retests on Tuesday trades. If I then just focus on taking break and retest trades because they had a positive EV on a Tuesday, I would start to see my probability of a win, my win rate for Tuesdays, go up most likely, because I am focusing on what I'm doing well. So pretty similar to what I said last week, do more of the things with higher EV. To decrease my probability of a loss, stop doing things with negative EV. Like I said, I had negative EV on a Tuesday. If I just stop doing that, my overall expected value is likely to go up because I'm likely to stop losing as many trades. So, looking for more confirmation before entering. So, I've kind of always thought of a relationship between win rate and risk to reward, where if you look for less confirmation, which is what I tend to do, I tend to be pretty aggressive with my entries, you will typically be going for higher risk to rewards because you have less confirmation. You are you're seeing less of the move happen before you enter, so you're catching more of the move. That's kind of just always how I've thought about this thing. So more confirmation for me tends to lead to higher win rates with lower average achieved risk to rewards. Not always the case, but that's kind of how I think of it. So if you're trying to increase your win rate, looking for more confirmation before entering might be useful to you. If you're trying to decrease the losses you're taking, using more conditions like candle close, right? Candle close is super useful for, let's say you're entering a bounce. Let's just call it a long bounce with candle close on. If you have candle close ticked, if price just, heads down and goes straight through your level and closes below your trigger, VEMA's not going to enter. Whereas if you have candle close, price has to hit your trigger and then close above, sort of showing some level of confirmation, right? Some level of bounce has happened there. So using conditions like candle close or like distance to confirm, distance to activate, that can help you with avoiding some of those losses you might have taken otherwise. Another thing that I have done in the past to increase my win rate is trading with the trend, right? You'll hear me speak about counter trend trading all the time. Avoiding counter trend trading is my probability of a loss tip there, because Not always, right? There are some people who are fantastic counter trend traders, but a lot of people will find that they trade much better when they are trading with the trend. It's just a little bit easier. You're trading with the market rather than against it. Typically, that works out a little bit better for most people. Another thing to increase your probability of a win is moving your stop loss into profit, right? If you've moved your stop loss into profit, if we're ignoring fees, because we are for this example because it just makes things easier, ignoring fees, you know you've won that trade. Regardless of price goes onto your take profit or it comes back and hits your stop loss, you know you've won that trade, you're not losing on that trade, so that can increase your win rate. Similarly, to decrease your chance of taking a loss, moving your stop loss to break even, right? Moving into profit does the same thing because it eliminates the possibility of taking a loss. But even just if you see price move a decent way from your entry and you're happy with how things look, there might be some market structure in between, whatever it is for your trade plan, moving your stop loss to break even rather than just leaving it where it was will decrease your loss rate, right? Your opposite of your win rate kind of thing. One thing that helped me a lot with increasing my win rate was having multiple take profits. So I used to just have one take profit and it was probably too aggressive, right? It was a very ambitious take profit, and price would often move, partly towards it, then come back and stop me out. And it happened a lot. Eventually, I decided to start using multiple take profits and I found that my win rate skyrocketed because all of a sudden, even if it never got to my, let's say I had 3 take profits, even if it never got to my 3rd take profit, it would often hit my first, which is typically where I'd take 50%. That was something that I calculated when I was back testing. I found that if I took 50% at the first take profit and 25% at the second and third, that was the best way it worked for me. It's something that you'll have to figure out in your own trading. But having multiple take profits, one, I just like it psychologically. It helps me rather than it just being like an all or nothing kind of trade. It helps me in terms of, okay, I've taken some profit. I'm not going to lose on this trade now, especially if you've taken 50% at anything more than a 1-to-1, because then you know that even if you get stopped out, again ignoring fees, but even if you get stopped out at that point, it's going to be a winning trade. It helps me psychologically, and it also helps, it can help improve your win rate. To decrease my probability of a loss, having criteria for when to close a trade was something that helped me out a lot. So I found a lot that the trades that worked out well for me were the ones that came to my entry and then bounced straight away. They didn't hang around. They didn't, take some time to decide what they were doing. They were short, sharp rejections. So eventually I added a rule to my trade plan that if price didn't move away, after a certain amount of candles, or especially if it closed within, I was typically trading with zones, if it closed within that zone and the next candle did not, move back out, kind of like a fake out type move, then I would close that trade because I just knew that the majority of my trades that lost were sitting around my entry and then heading down, whereas the majority of my trades that won were really rejecting clearly. You'd kind of know straight away whether that trade was likely to play out or not. Of course, it wasn't 100% of the time. Sometimes trades would hang around and then go in the intended direction. Sometimes trades would reject really well and then continue down to my stop loss. But it was something that I found was consistently happening enough that adding that as a rule did decrease my win rate. Decrease my loss rate. So there you have it, guys. Hopefully that has given you some idea of the ways you can change those probabilities, right? The levers that you can pull to hopefully improve your expected value by changing the probabilities of your wins and losses. In next week's video, I'll be talking about the things that I have done in the past to improve my results on wins and I was going to say deprove, the opposite of improve. Don't know what that actually would be, but to decrease the average losses I'm taking when I take those losses. Have a great day, happy trading, and I will talk to you very soon.